everyone, me Kevin here. I wanted to give you an update on how I'm investing right now. Given the craziness that's going on, I want to give you a warning as well as show you a $1.1 million bet I'm making. Now let me start with the baselines, so that way if you don't know me, you understand a little bit more about me, and if you already know me, well, you've got a reiteration on what the baselines are of my investing strategy right now. Baseline number 1, I am a buyer. That means every day the market is red. I have been buying stocks since March 10th. I like to nibble in so that way I'm not blowing everything on one day. I don't like to have a treasure chest going, one day I'll go in. Whoa, not today, but one day I'll go in. I'm nibbling in from that treasure chest. I'm taking a coin out. All right, putting it in. All right, putting it in. It's like I'm putting money into a slot machine. And that's certainly what the market feels like. Just a little bit at a time. You don't go to the slots and dump everything onto one bet. You sit there and play with it for a few hours. Well, this is kind of like the lifetime treasure chest. Just a little bit at a time, okay? That's baseline number 1. Baseline number 2, as I am long growth. That means Tesla, Amazon, Etsy, Apple, Redfin, maybe even Peloton. I'm not so jazzed about like the Shopify or Zoom or Chipotle's. I can't really I'm having trouble with those valuations, and I know some of these other ones are pretty rich as well, but those are great growth stocks as well. They're definitely on my radar. You can see my allocations if you go to metkevin.com/stocks June 22. Type that in, metkevin.com/stocks June 22. These stocks have been immensely profitable, and each of these have gained over $50,000 to $75,000 from my portfolio, just these individually here, even as of today, which today is a pretty rough day. Baseline number 3, I have no more than 10 to 15% in what I call the high-risk vaccine stocks. This is your high-risk, high-reward kind of trade-off. My strategy going into this pandemic was buy these kind of stocks every red day along with the other ones, but keep my holdings to these at about 10%. So that way, 90% of my money is going into the high quality stuff that I don't lose sleep over. Even when Tesla went to like $300 or $350 a share on March 23rd, I never doubted Tesla. I never thought Tesla or Amazon or some of these other companies were going to go bankrupt. It's then just really a personal question. Well, what do I think's a better value? You know, Shopify or Etsy? Oh, I don't know. They're probably both great. You know what I mean? But when you compare these high quality growth stocks to the vaccine stocks, like the cruise lines, which I would choose Carnival, or the airlines, which I like Delta. It's got one of the best debt positions right along with Southwest. Then obviously you have the Cheesecake Factory, whose balance sheet I don't like at all, but quite frankly, I can't be super excited by Dave & Buster's either. But these are all companies that would be excellent vaccine stocks. These are companies that could 2 to 3x upon a vaccine. And I've put maybe 10% of my portfolio into these. Unfortunately though, despite some profitable options trades that I made on Macy's and AMC, just kind of playing around when there was sort of peak fear going on in the market in March and April, my growth stocks are way outperforming my vaccine stocks. Well, imagine that. There hasn't been a vaccine yet. So when I look at my vaccine stocks, my Simon Property Group, and the Dave & Buster's, and all the ups and downs of these, I'm about break even on those, which now in hindsight kind of does make me look back and go, kind of wish I just put all that money on my high quality stocks. I would have been able to sleep better because I don't care if my high quality stocks go up and down, and I wouldn't have been as worried about the bankruptcy risk for these vaccine stocks. See, I have a serious concern as an investor, and this is different from being a trader. See, in my opinion, a trader is gonna look at charts. Usually like day trader videos on YouTube are like, all right guys, let's look at these charts. Here's what happened. And then they kind of like time lapse you through what happened. Okay, that's fine. I don't care about what happened. I wanna know what's likely to happen. And so there are 3 major issues that I see right now with vaccine stocks, because I hope that they double, but I have to be real and I have to address these unknown issues that there are in the vaccine stocks. Number 1, the biggest one, opportunity costs. I bought these vaccine recovery stocks, assuming the pandemic would come hit us hard. We'd 30 days to slow the spread. I told myself it's probably going to be more like 90 days, and then we'll go into a gradual reopening and this will be solved. However, thanks to the current surges in case numbers, I have a feeling, and I think it's pretty blatant now, that's probably not going to happen. This virus is not just going to go away. So we have these choices. Do we 100% lock down like New Zealand, which I don't know if we're capable of, or do we B, wait for a vaccine? And unfortunately, B, wait for a vaccine seems to be what we have to wait for right now. Unfortunately, a vaccine is going to take time. Yeah, there's probably going to be some kind of rally when a vaccine gets announced as being successful, but it's still going to take probably 12 to 18 months to actually get a vaccine, which means my opportunity cost is now even higher. Instead of some of these vaccine stocks doubling or tripling in a matter of months, it might take years if, of course, they don't go bankrupt. And remember, hindsight is 2020. Like looking back, yeah, should I have just plowed all the money I had into Tesla instead of bothering putting any money into Delta and Carnival? Sure. Oh well, that's a day trader move looking backwards on a YouTube video. I can't look backwards. So, more time is issue number one, the opportunity cost, right? We've got cases surging, which is a problem a second problem. And the third problem is at the same time as we have an opportunity cost issue and things are looking worse, not better, along with no vaccine, more and more money is fleeing the vaccine stocks in the short term, which puts a lot of downward pressure on these vaccine stocks. Then, number four, we've got to be real about this. There's a very real and increasing chance of mass bankruptcies hitting the airlines, the restaurants, and the retail stocks. And look, don't get me wrong, vaccine comes out tomorrow, these are all gonna double or triple, right? But we don't know if that's gonna happen at this point. Which initially wasn't that big of a deal because we're like, they got enough cash to last 3 to 6 months and then they'll bounce back. Well, yeah, but again, now we're looking at like 12 to 18 months. And then I got to thinking to myself, well, maybe they'll just borrow money from the Main Street lending program. But then we've got to realize just because a loan, like a cheap loan, is available for some of these companies that qualify for it, like Spirit Airlines, Cheesecake, or Dave & Buster's, or the Marcus Group or whatever, these corporations realistically have to ask themselves, are we really going to take on a 5-year loan and then have to repay that and have like no profitability over the next 4 to 5 years? Or is it better to just file bankruptcy, wipe out the shareholders, take their money, and just restructure? And so every day that goes by on these speculative companies, the bankruptcy risk goes up. In fact, take this for example. Dave & Buster's, their last quarterly report in 2019 mentioned bankruptcy 0 times. That's good, right? 0 mention of bankruptcy. Why would there be a mention of bankruptcy? The first quarterly report, because I actually read these things in 2020, mentioned bankruptcy 3 times. The second quarterly report in 2020 mentioned bankruptcy 34 times. Now, this is really when you want to make sure you have life insurance and you've gotten your 2 free stocks with the stock trading platform Webull. If you deposit your $100, you get those 2 free stocks worth up to $1,400 because these call for stressful times. Now, don't get me wrong, I'm all for volatility. When prices go up and down, I'm game, I buy. Because remember rule number 1, baseline rule number 1, I'm buying on red days. If Tesla goes to 500, I buy. If Tesla goes to 1,200 and back to 1,000, I don't care. I buy because I'm a buyer. I'm a buyer of Tesla, Amazon, Apple with a 10+ year investing horizon. These vaccine stocks, though, I don't care for Simon Property Group, a mall REIT, for the long term. And I went into the stock knowing that this is just a bounce back play. The bounce back plays, the hot ones right now, the Ford, the Cheesecake, right? The airlines, the cruise lines, AKA the vaccine stocks. I don't think any of us, or at least a lot of us, are like, seriously, we're going to hold these companies forever? I don't know about that. Like there are better opportunities out there, right? They're just only attractive now because they've fallen so much in value. But unfortunately, the more and more they fall in value and the more their earnings get diluted by more and more debt, the more these companies just got to straight up ask themselves, why are we bothering? Let's just go BK. And so here's my strategy now. With all of this background information I just gave you, here's the strategy. Number one, focus 90% of my stocks on long-term quality that will do well in the pandemic or not. Again, the Amazon, the Tesla, the Apple, the Etsy. Go to metkevin.com/stocks June 22, and you'll see kind of how I divide out the percentages and allocations for that. These are stocks I don't lose sleep over. I don't lose sleep when Etsy goes down 20%. I really don't care because I'm not worried about it in the long term. I read the reports. I believe in the company. I believe in their earnings. I'm happy. If they go down, I buy more because number two, I buy on red days. Number three, I don't sell my quality stocks. I just keep adding. If I have quality stocks, I keep adding to them. Number four, I only buy up to 10% of these sort of spec stocks. And number five, well, this is where my new $1.1 million bet is. It's real estate. Over the past 2 weeks, I started the process on purchasing 2 properties for around $570,000 each. That's about $1.14 million in purchases. Now, both of these properties are going to be worth between $700,000 to $725,000 after I put just $40,000 into them, which means I will have turned about a $1.18 million investment into about 1.4 or a little bit above. That works out to somewhere between a $250,000 to $300,000 gain that I could bank on my wealth going up from because I bought these properties below market value. Now, because I'm financing them with 25% down, I'm only actually coming out of pocket about $365,000. 25% down on one, 25% down on the other, $40K into one for fix-up costs and holding costs, and the same $40K into the other one for fix-up and holding costs. Then I rent them out and I hold them. I don't fold them. And all of a sudden, instantly, I've boosted my net worth tax-free, a good 70% to 80% of what I invested. The nice thing about real estate, and this is why I love real estate so much, is, yeah, I like buying stocks. It's easy to sit here and buy stocks, and I buy my high-quality stocks. But even when I buy Tesla at $950 or whatever, I'm paying market value today. When I buy it at $500, I'm paying market value then. Cool thing about real estate is when I buy a $700,000 house that I finance for $540,000 or $570,000, whatever it is, I know that I'm buying it below market value. That I love. And to me, this is the coolest way to diversify. I diversify with a little bit of kind of fun risk on the vaccine stocks. Yay, we'll all get to have a party when they skyrocket, hopefully when and if one day they skyrocket. But in the meantime, high quality, long-term stocks and below market value real estate. And fortunately, thanks to loan forbearances and the Fed printing money and keeping rates as low as they are, I'm really not worried about real estate in the next sort of 2 to 3 year term. Now, this doesn't mean go blind on any investment. You don't want to go blind on your high quality stocks because they could become low quality. You also don't want to go blind on your real estate to where all of a sudden you're feeding negative cash flows and the properties are falling into disrepair. So obviously, this is a little bit oversimplified, but here's my recommendation to you. Do whatever you can to buy high quality stocks that you're not going to lose sleep over or fret over. The more you know about a company, by the way, the less likely you are to fret over the price. So like if you go buy Fastly and you know nothing about the company and all of a sudden somebody comes out with a report and goes, Fastly's a scam, you might feel anxious, like, oh my gosh, well, what if they are? What if they are fakers? Like what happened with Enphase the other week. I swung trade that and pulled like 20K out of that trade. That's great. It's fun to do these little swing tradey kind of things. But you gotta know the companies to be able to actually do that or to feel comfortable in holding these companies. It's kind of like knowing real estate, which is always my second recommendation. Buy real estate and build your wealth very, very quickly because you can leverage the fact that the government lets you buy these things for 3 to 5% down if you want to live there for a little bit, and then you turn it into a rental. To me, that's the ultimate diversification. Taking advantage of the fact that the government lets you get into real estate cheap. You can get deals below market value, and in the meantime, just put your money into quality stuff that you're not going to lose sleep over, because this sort of pandemic has been one heck of a nightmare investing time horizon, I guess. Anyway, it's been causing some anxiety, okay? It makes you feel like you're throwing money onto a fire pit. But anyway, thank you so much for watching. Please consider subscribing. Check out the programs down below. Make sure to get your 2 free stocks with Webull. Sign up for life insurance. And folks, there you have it. We will see you again soon.